Hey guys, it's Chase with Ethical Trading. Give me just a second to finish sharing the link to get everyone in here. That was asking for a live stream, and we'll jump in after that. Let's see. Almost there. And in the meantime, if there's any tickers y'all want, I had to go grab a cup of positivity tea after seeing Stevie's list. I kid. But pulling up any others as well that y'all want to throw in the chat, and we'll take a look. Let's see. Alright, trying to make sure I pull everything together from 3 different Discords and like 5 different Facebook groups for y'all. Hold on. Y'all know everybody is welcome in here. This one. Hey Seth, what's up, dude? Alright, let me switch over to this mouse and keyboard here and jump into the charts. So, let me, hold on. Alright, so what happened today? For one, people are panicking, and 2, you shouldn't be, because what we saw play out today was exactly what the technicals kind of showed and what we've been talking about in any of the Discords that I've been in with you, right? As well as on the Facebook groups. Multiple of them are affiliated with other Discords, and it's fine too. Like I said earlier, everyone's welcome to join live streams. Everyone's welcome to learn from whatever sources. I try to maintain a very unbiased outlook when I'm looking at any of the technicals, even though I'm a bull at heart. And I know it can come off as bearish when sharing a lot of these patterns and stuff that show bear flags, but it is what it is, and that's what's on the chart. So that's what we're kind of seeing happen at the moment. We're going to start looking at the daily time frame on a lot of these big tech tickers here, because it was really telling, and you'll kind of see why I've been looking at what I've been looking at. Specifically the 200 EMA, which is one of your key indicators for, and y'all know I'm not real big on using indicators for specific short-term trades. However, the 200 EMA and the 50 EMA, but specifically the 200 EMA, is really important because that's what larger institutional investors are looking at for longer-term trends and pattern movement for mini tickers. It's why when you see certain stocks break the 200 EMA, there's typically a more dramatic reaction as a result of it. And that level also serves as a dynamic support or resistance. And you'll see that as we're going through the charts here in a moment. But working my way down through big tech, we'll kind of start here with Apple. If my charts are overwhelming because there's lots of lines, I apologize. I trade many time horizons, and a lot of the people that kind of follow my charting and stuff know that there's a super clear, consistent, methodical approach to the lines, and you can find the legend for what each lines very specifically means in the description for this video. For instance, solid yellow lines are more significant levels of support and resistance, because I'm all about price action trading, and the historicals, which you can see are reflected very well here. And if we're looking at this, kind of circling back to the 200 EMA, what happened? So what I'm about to explain on this part is going to apply to quite a few of these that we're going to look at, but we'll start here on Apple. We broke the 200 EMA, which is this orange line. The 50 EMA is the blue. We broke that forever ago, but the 200 EMA, like I said, serves as your sort of guiding light and dynamic support and resistance level. Let me remove this extra indicator we got going on here, because that's going to confuse y'all. That's the daily. I might leave the 1 hour. I'm going to leave the 1 hour so you can see why I leave it. That's 1 hour candles, by the way. This thing here, which will make more sense when we look at a smaller time frame like the 15 minute. On why I see that valuable when I'm looking at a 5 minute or a 15 minute candle pattern. I want to see the 1 hour to see how that aligns. So if I see a reversal print on the 1 hour candles and that aligns with breakdown or a bounce on the 1 hours, then that's going to be good. I'm always looking for confirmations, I guess is what I'm trying to say there. But sorry, first live stream in a couple of weeks at this point because all the work travel and stuff. So trying to regather stuff without throwing y'all through all the chaos in the meantime. So what do we got going on here? So what we did was we broke to the downside on Apple of several key levels, including this key support zone that we had here at the 220.38 level, right? So we broke down hard there, but we caught a bounce and got retracement bounce here. One thing that we've been watching closely on a lot of these retracement bounces, and just to kind of clarify, because we're going to see this quite a few times, is when you're in a downtrend on a chart, you're going to have retracement bounces and the broader downtrend, just like whenever you're in an uptrend on a chart, you have retracement pullbacks that take place before you have upward continuation of the trend. So we need to see further confirmation, but as of right now, what it appears to be happening, because we maintain broader downtrends on a lot of these charts. You can see we had our high here on Apple, we had a low, we had a lower high, we now have a lower low, and we're going to see here if we form yet another lower high, which you can see it looks like we're rejecting at the 200 EMA, and I'll show you on NVIDIA and some others here in a minute why that's really important to keep a close eye on. There's a few different things you can note here as we're in this broader downtrend, because we got this bouncing. Yes, it was a beautiful bounce on quite a few tickers. That being said, the broader downtrend, or the prevailing trend, if you will, is still intact. So we're still in a downtrend from our high here, right? So that's something, until we have a higher high above the previous lower high, the downtrend is still intact. You can maybe form a higher low, but until that higher high forms, the downtrend remains intact. So as of right now, what happened and why did I, for instance, trade Apple puts with the rejection yesterday on this that ended up paying out well? Not as good as Google, but they still paid nonetheless. The volume taper. So really good learning opportunity here too, because you're like, volume taper, what do you mean? There's this one huge green candle. That was triple witching monthly options expiration, weekly options expiration, and quarterly options expiration that took place on 3/21. That is important to note, because whenever that happens, it can be very misleading and confusing for a lot of newer traders, because they see that strong volume push like that, and you can have really wacky volume that comes into play on triple witching or OPEX dates like that, much more than what you would see on your normal weekly options expiration, aka OPEX, for those that are like, what's he talking about with OPEX? And that is why. So, and yeah, Prakash, I'll cover those tickers for you. Also, Stevie, I'll cover the tickers you mentioned, just kind of talking through this broader what's going on with big tech tickers here, because the principles that we talked through here are going to apply to quite a few of these other charts as we drill in, and hopefully y'all can start to see kind of the comparisons and the why certain things played out certain ways. So Apple, like I said, we're still in the broader downtrend here. We get a rejection off the 200 EMA. I'll put all of this in the detailed technical analysis with the chart that I normally post each day, but I'm going to do that for the big tech tickers here. What happened was we made that retest attempt and rejected. So real quick, before I go through all the rest of tech tickers, I'm going to jump over to QQQ and SPY, and we're going to look at that, because like I said, the same thing's going to apply here, and it's a dangerous spot for people that are trying to go long without confirmation. But the reason I want to look at QQQ and SPY is, for one, the 200 EMA, right? we attempted to break above it. And when you see this is why I'm always really cautious. I'd rather be cautious and give up like money trying to hope something plays out in my favor. A lot of people made gains in those 3 days where we pumped. That's great on calls. For me, risk to reward didn't make sense to swing calls, and it still doesn't on a lot of big tech. Because while we did pop above the 200 EMA here, and we even had a follow-through candle here, the thing that stood out significantly for me, I guess I will go ahead and say with QQQ and SPY, I'm always looking for what the top weighted contributors for those ETFs are doing, because ultimately those are driving the ETFs, not the other way around. So the reason why this is important is because, for one, we tagged that resistance level yesterday on QQQ, but the one red flag that really stood out here for me on this is this taper of the volume as price action was moving up. And that's a super simple principle that you'll see on a lot of these charts that actually, as simple as it is, it's extremely valuable and applicable and consistent for noticing certain things whenever you're about to tag a reversal. Yesterday after close, I actually shared with people a screenshot of NVIDIA's daily chart as well as several of these others, and mentioned the concern as we closed yesterday with the weak tapering volume into key resistance levels. So you're going to see that here on SPY and several others where the volume was tapering down. Again, you can basically exclude OPEX volume pump out of your mind because that's going to be an outlier. But we tagged the key resistance levels, and we basically formed a perfect reversal pattern here with these 3 daily candles. What also didn't sit well with me on a lot of these tickers is that we made these huge gap ups starting Friday into Monday, right? But we never filled the downside gaps. And it's not 100%, but gaps tend to be filled. So I was trading cautiously here for one, but also the volume taper, lots of red flags going on there. What we have now done, though, is on SPY, we're back testing, and technically we rejected and closed below the 200 EMA you can see there. But like I said, the top weighted contributors to SPY and QQQ are what we're going to be looking at for indication of what those ETFs are going to do. So I'll come back and circle back here on SPY and QQQ. The main tickers that you want to look at for driving QQQ, SPY, SPX, NASDAQ, all of the above are going to be NVIDIA, Apple, and Microsoft are going to be main ones. I know Tesla's got lots of hype, but Tesla's weighting is high. It's not as high as the others. At the end of the day, if you've got NVIDIA, Apple, and Microsoft that are dragging down hard, they're going to pull the market and the ETFs with them, which is basically why you saw today. I mean, look, Apple only had a 1% down day. Microsoft had 1.31, but NVIDIA freaking bombed, right? And as a result, the ETFs went with it. I don't know if y'all are aware, but that's a pretty heavy day for the ETF. So, Analyzer, you asked about the difference between EMA and SMA. So, I've got actually a kind of breakdown thing that I can send you that explains it in more detail. But for me, I prefer EMA in periods of high volatility, which is what we've experienced lately. It's a bit more accurate or applicable. Both technically are lagging indicators, so keep that in mind. But SMA tends to work a little bit better for when you have a lot of market kind of consistency and you're looking for just very, very generalized, broader trends in market sentiment. EMA is a lot more applicable for volatility, rapid movement, especially on tickers like NVIDIA, Tesla, and others that can be highly volatile in general. I find the EMA is much better to use. Also, I mean, that's kind of what this trend indicator you can see is based on here, is following the EMA based off each of those candles or the time frame. So, looking at NVIDIA here, what did we see? Remember how we were looking at QQQ and SPY a minute ago on the daily candles? And I mentioned the volume taper. So NVIDIA is where the volume taper was extremely obvious without kind of having a weird skew due to OPEX, as well as NVIDIA tagged its 200 EMA here, which is where it rejected at previously. And it retraced and it rejected perfectly again. So what I'm looking for on NVIDIA here is it going to fill this gap at 112.24? And NVIDIA is one that probably should be concerning overall for a lot of people, because as much as I love my shares of NVIDIA, which I've hedged accordingly with covered calls like I've done with Tesla, it remains in a broader downtrend right now. So it's concerning. We are only midweek, and our volume's going to show lacking on the weekly at this point, so keep that in mind. But look on the daily candles here. What you can see is the buyer taper here. This is buyer exhaustion, is what you saw with the price action moving up, buyer volume moving down. On this first big fat red candle here where Nvidia is coming and the sellers are stepping in, it has solid big heavy volume. So we will see tomorrow if that continues, but typically if you start off with strong selling volume like that, it's going to intensify, similar to what we saw over here. If you look at this candle from February 21st, notice how volume, sorry, can't talk, I need to drink some of this tea, I guess, but volume tapered down and kind of like just drizzled in here as we hit a key resistance and rejection point, and then volume ramped up with sellers, and then it got more intense. And that's not to say you go straight down. I'm not saying we can't go straight down. I never expect us to go straight down, but we're going to have retracement bounces along the way down, right? So as of right now, though, if you look at the broader trend on Nvidia, we've got a high, a low, a lower high, a much lower low, a lower high, a lower low, a lower high potentially here. And what's that mean for us on Nvidia, right? So definitely keep in mind here, it's a spot, as I said in the analysis yesterday. I'm not saying just watch and wait and do absolutely nothing, because many of us are in longer term positions on things like Nvidia and Tesla. It's absolutely, like I mentioned in the analysis the last 2 days, those were great opportunities to sell covered calls on those big green days and pops where call premiums are in your favor. Miriam said what to expect from tomorrow's market. I'm not even going to guess and speculate fully. There's no way to know that. I can tell you based off these charts here and what I just mentioned, looking at the technicals, we could see more selling. Alternatively, we could see a bounce and a small retracement or something, but the difference between the selling that you see now compared to the gap ups that we saw before is that we don't have gaps to the upside on most of these tickers that need to be filled from overnight. So there's no really technical need to bounce and fill that gap necessarily before moving further down. Yeah, Agony, I do alert covered calls. I didn't do a fresh one for Nvidia because I'm still in the previous one. I'll look and see. I looked hard yesterday because I debated selling covered calls on it, and I held off because I only had 2 contracts to sell on it, so I waited. And I kind of regret waiting on those 2. I should have sold them with my other 3, but it is what it is. There's other strategies y'all can use to hedge as well, but we'll see what plays out here. To answer the question from the chat, we're going to see whether or not we move up or move down. We go, thought it started off positive. How do we get the negative? What aspects of the market do you look forward to confirm that? So, nothing's, aside from potential tariff relief, which is questionable depending on the given day, right? There's so much uncertainty still in the market right now between tariffs, trade wars, whether inflation's actually going to cool, even though some of the data shows like it's trying to. I don't care whether there's a recession or not, honestly. But really the uncertainty in the market and that fear, that is what is still in place. And I think, unfortunately, as much as most of us don't like sort of the impact that it has on the markets in general, which we can make gains either way, it's here to stay. It's going to be here for months to come, partially due to the administration, partially due to where things are in the world in general. So I think that regardless of, the broader sentiment and hope that things do bounce back or that we have Fed rate cuts, where we're at right now is there's still a lot of uncertainty looming. And what that means is there's a lot of risk involved for swinging options on, especially these big tech tickers that are highly susceptible to that fear and concern in the broader market. Whereas there are plenty of other tickers you can trade that have better risk to reward and not as huge of an impact that comes in whenever you have some rogue tweet. But we all know that these, like what you start to notice once you understand selling premiums as well as buying premiums, is that retail in the broader market plays into buying calls into the moves like we've seen the last couple of days. And while a small portion of retail took gains and made gains on things like Tesla the last couple of days, and I think the biggest gain I saw in Tesla was like 120% off like a $400 or $500 contract, For me, that risk to reward's not justified in the range. But also, what you're not seeing is probably 95% of the people that have got completely and totally burned swing call contracts the last 2 or 3 weeks, or people that stayed in call contracts on Tesla overnight or Nvidia and others, and they woke up today and they were down and they kept sitting in that position with the hopes that it's going to bounce when it's at level like it was at 2 days ago, and then it blew right through the level. So that's sort of the nature of the game. Everyone from a whale standpoint or a larger institution standpoint knows that retail and the broader markets have a bullish bias. And yes, historically over time, the markets tend to go up. That being said, call contracts and put contracts on a lot of these big tech tickers, they don't care that the longer term market tends to go up. So there's still a lot of uncertainty looming right now. I think a lot of people are looking for, was it next Wednesday with the tariff news on the 2nd to be some sort of deciding factor on which direction things go. I mean, y'all have seen the news headlines and y'all have seen this stuff related to tariffs, so I take it with a grain of salt at this point what direction things are actually going to go. I'm trading the charts and the price action in front of me, as well as looking at the underlying data behind the scenes, and I can tell you the last 2 days, the big boys and girls have been selling heavy call premiums, like sell to open premiums on Nvidia, Tesla, Apple, Microsoft, and several others. I shared a screenshot of some of those yesterday. So what that tends to mean is that they are seeing us roll into a resistance that they expect a rejection to drop, so that those premiums on those calls either deteriorates if we trade flat and range bound, or if we drop, those premiums are going to tank as well with the drop, and therefore they can either choose to buy to close the premium, or they can ride it to expiration and it expires worthless. And that is what a lot of your market movement is coming from, those types of things. So Nvidia, not to beat a dead horse, we're in a downtrend here. That's strong selling pressure coming into play here. We'll see whether or not we catch a bounce tomorrow, or if we do downward continuation. Apple, we kind of looked at earlier, but what you have on a lot of these tickers is, for one, a retest or a rejection of the 200 EMA now that we're trading below it, which is significant, and it's part of a larger bearish structure if that's in place. And again, just to be transparent, I'm not a bear and I'm not being bearish by saying that. I'm stating what the chart actually has here. If I had it my way, and if my retirement accounts had it their way, we would just go moonbound all day every day, but I understand that that's not the case, right? So what we're actually seeing now form, especially if we confirm follow-through rejections tomorrow or Friday, is that on a lot of these we're going to form bear flags. Some of them we already have. Some of them we have rising wedge patterns that have formed here in the smaller term retracement in this relief rally that we've seen. And when those break to the downside, the measured moves are going to be rough. So just something to be prepared. And again, not saying that means go buy puts on everything by any means, because at the end of the day, I'm going to look at each independent chart and ticker and specifically look at that for my intent of how I'm going to trade it, or if it doesn't make sense to trade it, which is more important, I think, for a lot of these, is to know when to not trade something and where it makes more sense to sit out. So kind of stepping through here, you're going to see most of these patterns or levels are going to look very similar. So delete that, it's not in here anymore. But Amazon uptrend, we broke the uptrend, we've retraced at this point. You see the orange lines are 200 EMA on Amazon, and yet again, it's trying really hard to hold after retaking it. We'll see whether or not that's follow through. Volume is about average on Amazon, so there's not like a specific red flag one way or the other there. AMD is one that I know several of y'all have asked me, and I've talked about it on the stream many times for months now, because I've wanted to go long on AMD for a long time now, because I like AMD. That being said, I'm patiently waiting until we have confirmation of a true reversal, because as of right now, looking at the weekly, we are very much still in a downtrend here, and volume is overall weak on AMD, so that's not helping the situation. Plus, it's looking like we very likely might have hit just another reversal right here with strong selling volume coming off that. So minimally, probably expect a gap fill to take place there. And for those that are kind of new and trying to figure out what I just did, so if there's a gap on the daily chart, I'll mark the gap fill level with Yeah, Miriam, these are all going to be examples of bear flags. I'll show you as we go through them. Exception maybe being AMD at the moment on the daily, because it's not a bear flag on the daily, but it is on the weekly. What I just did there was I marked, and I know it's hard because there's a support level there that's solid yellow, but you can see this gap here on the daily. Oh, y'all can't see my little circle thing that I'm throwing up on the video right here. You can see my cursor though, so that gap there on the daily, gaps tend to get filled. And if you go look at the Tesla chart, which we'll do here in a minute, you'll see exactly what I'm talking about, because we went from over 400 highs to very rapidly filling downside gaps on the daily chart. So AMD, the interesting thing you've got going on here is the 50 EMA is trading below the 200 EMA, which is different than the majority of the other tech tickers. Part of that is because AMD's been in downtrend for much longer than all these other tech tickers have. So basically the 50 EMA is serving as your dynamic resistance level at this point. So I wouldn't be shocked to see a rejection back under that at this point. I want to see if it can hold 94.46 and push out. Once it confirms a breakout to the upside and it truly reverses on the weekly, that's where I'm going to go long, because it'll, even if I have to pay a little bit more for calls or if I pay a little bit more for shares, I'd rather do that. Is there any way you could tell me how? Not sure the question there, but I'd rather pay a little bit more once I have confirmation. There's still going to be plenty of upside movement to trade. So you want an example of a bear flag, Miriam? Right here on Google is a good example. So Google completed this upside move from a falling wedge breakout that I had targeted, which is this green arrow, yesterday. I'm going to delete that since we completed it. And when I saw the rejection with tapering volume yesterday, I bought Google puts. I started phasing into them lightly because I saw technical indication here of a reversal, as well as I saw options movement that supported that, as well as the fact that the options were about $120, so $119 premium each. When I added to them yesterday on my initial entry, they were $187, so $187 give or take, but the reward potential off of that was significant. That makes more sense to me than trying to trade, even if it's further out expiration, on something like Tesla calls, for instance, in June, July, September, where you're going to pay $500 plus for some contracts that make sense. There's a lot more risk to swinging something on Tesla in that situation, with a lot less reward potential, considering it took a huge move on Tesla to give 100% gains on those. Whereas these Google puts, for instance, that bottom at 119 with the re-entry, they hit 116% gains in a day with that one single candle drop. So I will trade big tech tickers where it makes sense to do that. So watching this here, kind of to further clarify your question, so you can see here, this is a bear flag, bearish pennant that is formed here on Google. So I actually could move this to be more conservative like this if you want to call it straight up flag, right? But basically what you're looking for here is not just a wick below, but once you get a break and a confirmation below that level, that would be a breakdown of the flag, and the measured move of that breakdown on Google on this bear flag breakdown would actually put it down here in this 143.59 gap fill level. So that's why it's important to monitor both sides here. That's also a rising wedge. It's potentially going to break down from there. So I would watch for that to break to the downside as well. And there is a potential inverse head and shoulders forming there, but what's standing out to me is the volume. So buyer exhaustion occurred and tapered off. Seller volume came in strong. So that's what you typically are going to see when you're peeking into resistance, and it looks like that little retracement rally may be done, but we'll see. Maybe things into next week are different. I did already trim to cover cost basis on my Google puts today. I'll ride some runners out from here to see what happens. And sorry, I know there's tons of comments in the chat, so I'm going to try to crank through those as well, while still also going through the tickers that people requested. So jumping back over here through Microsoft, I'm going to slam through some of these quicker, and then I'll give you all the detailed analysis after the fact. But Microsoft has maintained this head and shoulders pattern, which is a bearish pattern that it broke the neckline already once on. But then I extended it down to be even more conservative with it. But Microsoft, as of right now, is attempting to play out this head and shoulders pattern to the downside. So watching this, because what I'm concerned about, same thing here, is this rising wedge that we got going on a lot of these tickers is bearish if it breaks the downside. So definitely keep an eye on that. You want to see if Microsoft can hold this key support range at 389.97, which it looks like it's already attempting to lose in after hours. I'm not putting a lot of weighting on the after hours movement though. Miriam, that question about which contracts do you choose? I mean, those were the 164.17 Google puts that I chose on that because the strike, I like choosing strikes that are within trading range by the expiration date to justify it. And I've got like a whole write up on how to do options expiration and strike selection. If you want to shoot me a message on either Facebook or Discord or something, I can grab that for you. So watching Microsoft head and shoulders there to see what happens, see if it breaks to the upside or if it actually continues to play out to the downside towards that 344 level. Meta's potentially forming another head and shoulders pattern here like we saw in some of the others. The nice thing about Meta compared to a lot of these others is it's at least trading above its 200 EMA and seller volume is at least tapering off a little bit. So that's, you can see a key difference looking at Meta here. Not saying go long on Meta because for me, there's still a hell of a lot of risk going on there with that pattern as well as knowing where the market is. So personally, I won't be swinging calls on something like this, but just calling it out purely based off the technicals. NVIDIA, we talked through in great detail earlier. I do want to glance at SMH real quick because this is from my standpoint, this is one of my preferred ETFs to focus on for semiconductors. And we all know that semiconductors like NVIDIA have been heavily driving the market movement the last 18 to 24 months. So the concerning thing that you got here on SMH is this head and shoulders pattern here. There's now technically a bear flag that is formed as well here. Actually we broke down from the rising wedge on this one already today, it looks like. So we'll see if it follows through and confirms to the downside or not. Market like that, so we can keep an eye on it. It also had hellacious selling volume with that, which makes sense given NVIDIA is driving that. So we'll see if that breaks and pushes further to the downside. This is good for keeping an eye on to see what the broader sentiment is. Tesla. So here's my thing on Tesla. A lot of y'all have seen and heard me talk about Tesla and know my stance on it. Bullish longer term, but also totally not going to be silly and let bullish bias drive my trading decisions on it. The appeal and the hype around Tesla on the bullish side is like we all feel it, and it's hard not to channel it and feel it, but risk to reward, right? So yes, trading that breakout with the increasing volume very quickly and then bailing looked good, but now we've also got a reversal pattern that's printed here. Why did I not trade or buy calls on this? Because I sold covered calls yesterday on this that I'm up significantly on. So that is my strategy shift for Tesla that I've been doing about 18 months now, maybe 24. I'd have to go back and look. But rather than playing the buyer side with premiums on Tesla to swing, I've had so much more success with actually selling premiums into resistance based off of the chart levels, as well as monitoring what the whales and overall larger players are doing. So yeah, we can even get a retracement bounce on here. What I'm looking for on Tesla is something similar to what we saw in Q3 of 2022. I would expect it to sort of consolidate and chop and move across this range between 232 or I'm going to say 232 just to be broad with it, but basically 232 to 300, which seems absurd and like a huge range, right? And it would be for any other stock. It can consolidate and chop back and forth in this range, and then we'll see where it's going to go. If it continues and if the movement makes sense based off what I'm seeing on the option flows, we're going to chop, we're going to consolidate across this range, then we're going to break lower. There's multiple things you can look at here from a technical standpoint. We're still trading well below the 200 EMA on Tesla. You can't go with the mindset that if I buy far enough out calls on Tesla, I'll be okay. Because I watched multiple people buy calls on Tesla January into February that those suckers were for June and September and even January 2026. And even with this huge little retracement rally thing we got going on here the last few days, they're still way the hell down on those contracts if they stayed in them. So buying further out options doesn't guarantee that you're going to be safe. I know that I say this from experience. It's very easy to fall into mindset after we've gone through a strong bull run on the broader markets where stuff moves up and you can buy further out calls, and eventually if you buy enough of them or average down, it works out in your favor. I can tell you that sooner or later you will get burned by doing that. So it's important to acknowledge patterns and setups in both directions, as well as understand behind the scenes what's going on with the options movement, as well as understanding that the big players, and I'm not big players, just to clarify, the institutional investors, the funds, the whales, they aren't making their money based off buying and selling shares. They're making their money based off of selling premiums to all of us masses, that majority of those contracts end up expiring worthless. So that is where, once you understand that and you sort of see how the price action moves in relation to that, you can be a much better trader with a higher rate of success by not playing directly into that as the victim, and rather instead, I'm not saying go sell premiums because not everyone's going to have the capital to do that, right? But understanding that can help you be a much better trader of options, whether it's calls or puts, because you're going to look and identify and know where risk to reward just flat out doesn't make sense on something. So just throwing that out there. QQQ and SPY we touched on, but ultimately both of them are similar in a rising wedge to what we saw in a lot of those big tech tickers, right? So watch for breaks to the downside or bullish continuation. We'll see whether or not tomorrow, which I haven't even looked to see what after hours. See percentage change, extended hours change. So yeah, I mean Tesla's getting an after hours pump for some news or something, but like I've always said, don't put too much emphasis on after hours movement. Let me make sure I've got my list over here. Wood and Uber. Let me jump down to Stevie's list too, because I think there might be some overlap. First technical analysis request. Man, y'all were kidding. I think I got too many in here now. So we did Microsoft. Vert. Here, I'm gonna do Vert real quick, and then we'll dive to the others, because Vert is sort of an outlier one that I did trade some calls on. A very, very light position, because it did drop down heavy, but I'm watching Vert because I want to see whether or not it bounces off of this demand zone we've got going on here. So again, don't go heavy on stuff in general, but watching this for the back test and see if it gets a reversal. Vert's got some interesting stuff going on over in the European market, so that's something to keep an eye on. They got a price cut from Barclays today, which is what helped it dive, but yeah, definitely keep an eye on that. We'll see where it goes from here. TSLL. Stevie, you sure you want me to talk through that one? I know the person had alerted that elsewhere, and I know they're going to get salty when I talk about this. So, I mean, basically all that analysis I just talked about with Tesla, it very much applies here as well. And I think that people will try to take and trade TSLL and the other ETFs that are based off of a leveraged aspect of a given ticker, and they will try to trade it the same exact way. And it doesn't quite work like that. So like this is a 2x based off the shares, and if I recall right, TSLL is based off the percentage movement of the underlying Tesla for the given day. Yes, it is. I see it right there. So Tesla moves 5.58% for the day. So what you can expect TSLL to do is move about double that, which is what you saw here. The reason why, even though the options are cheaper, you don't see me trading this a whole lot, is because the premiums can be a bit wacky. The volume is a bit wacky. Also, this thing is actually designed to be a bit more of a hedge instrument for Tesla in general, rather than directly traded. A lot of retail traders and even analysts or mods that you see on some Discords will alert stuff like that without really understanding what's the driving movement for it. And again, not saying you can't make gains with it, but it's kind of like, it's not consistent. So that's why you don't see me trading a whole lot of it. Technicals wise, I can map it out and do it for you, but I mean, ultimately, it's going to move based off a 2x percentage value of whatever Tesla's doing for the given day. Pinterest. Hadn't looked at this one in a minute. It looks like Pinterest is actually, man, that's how long it's been since I've looked at this chart. We started filling gaps and I haven't even marked them. But Pinterest, it looks like, yeah, these calls were way old. We already took gains on those. I don't know if there's new contracts somebody's in, but it looks like it's fighting to keep its 200 EMA at the moment. So keep an eye on Pinterest. These are levels. Remind me, or leave it in the channel. I'm gonna do it actually. I'm gonna put it right here in the channel thing so I can come back to it for Pinterest to pull the TA for it and post the detailed thing for you. ONQ, RGTI. I'll tell you what, both those, rather than going through it on the live stream, I'll pull the detailed TA for you to save time and to be fair and cover basis on all these others that people are requesting too. Man, I just saw 12's post about the GameStop offering. I mean, like, what do people expect? There's a reason. Like, that's the smart thing to do as a company. I love GameStop, and Ryan Cohen knows what he's doing. So you can't be mad about the share offering. If you're truly long-term into GameStop, then that's the right thing to do from a company standpoint. So Hood. So Hood got a pullback today with the broader market pullback and crypto pullback, but looks like it finally filled this downside gap right here. So yeah, Hood, watch to see what it does, because it's actually forming a bit of head and shoulders here. At the end of the day, Hood's going to do whatever Bitcoin's doing, is basically what you can count on. So if I look at Bitcoin right now, not to make this a total crypto thing, I mean, there's your Hood chart driver right there. I can tell you crypto in general is going to bounce back quicker than most of the big tech tickers are on kind of odd market movement right now. So that's Hood. I'll pull the levels and stuff for you. Uber. So I'll show you why I started easing into the calls on Uber earlier today. I'm glad I remembered to check this damn thing too. So a few different things going on with Uber, and this is a good example of one of those random tickers that I was talking about that might make more sense from a risk to reward standpoint to trade instead of big tech tickers like Nvidia, Tesla, and others. So multiple things. Uber is trading above its 50 EMA and its 200 EMA right now. Uber is also in a uptrend over the last couple of quarters, so that is positive intent at the moment. Overall, it still has a potential downtrend coming off this, but if it does break out to the upside of that, you're talking about pushing a potential new high. There's also a potential inverse head and shoulders in play here on the daily and weekly chart. There's a lot of good stuff that I'm digging about the Uber chart at the moment, and that's not saying it can't just die, but think about what we talked about with all these other tech tickers and buyer exhaustion, for instance, occurring whenever buyer volume is tapering in upward price action. Now let's take that same sentiment and practice right now, and let's apply it to right now what you see happening on Uber for the last 3 daily candles. Seller exhaustion is occurring as price action is moving down the last 3 days, as we're at a key support that we call a bounce at. So while we haven't confirmed fully a breakout to the upside, I went ahead and started phasing into calls on Uber here because there's a lot of nice things going on the chart. So for me, risk to reward made sense for those contracts to go ahead and ease in. Also saw some interesting movement over on my option screeners that has me a bit optimistic. So we'll see whether or not that holds true. I'd like ideally to see it hold that 73.57 level and push to the upside and break out right here, because there is another inverse head and shoulders going on there. So if it can break out to the upside there with strong buyer volume, that'd be fantastic, and we can expect a strong move to the upside. But I posted detailed analysis with the alert on this one earlier, so I'm not going to spend too much time diving deeper on it. But yeah, Uber's one of those that, I mean, you can overall see the pattern in the chart setup's in a bit different place than a lot of the big tech tickers that we've been looking at. Other tickers. Let me go through the chat feed real quick. Micro strategy and sound. Let me look at sound real quick. So sound is still kind of in this downside movement, right, that we've seen previously, which makes sense because sound gets a lot of sentiment indication coming from NVIDIA due to the AI craze. So you can see it's been riding along its 200 EMA here. It's been trying to hold it. But as of right now, sound's looking like it could potentially break to the downside. It is trying to form. Here, I'll delete these since we already completed both of them. Not to muddy the charts. It's got an inverse head and shoulders there. It could break to the upside, but sound's kind of in a flat consolidation zone right now where it's not clear which direction it's going to go at the moment. So if it does get a strong breakout to the upside with strong volume, there's a lot of potential there. I mean, you can see that that's a potential big breakout if it can, because it could head towards this gap fill level market. So we have it, but yeah, I'm kind of watching this. I'll watch it and see if it makes sense to enter calls or shares on it again when the time shows. Agony, Microsoft I covered a bit earlier, so you might have to go back a little bit more precaution. I'll show you T here in a second. Let me start back up the top and make sure I'm skipping a bite, but T is looking good. MicroStrategy. So check this out, which of course is driving with Bitcoin, but MicroStrategy is looking actually pretty fantastic right now from my perspective. So you can see here, not only is it breaking out of this falling wedge it started to build out, but also it's maintaining a strong upward movement. Again, tied to Bitcoin and very much heavily moving in alignment with Bitcoin. I would be a little concerned if we break that trend right there to the downside. It's potentially trying to form a reversal here, but we'll see whether or not it consolidates and moves higher. Honestly, my feelings wouldn't be hurt if I was looking at the weekly here. If it broke out to the upside of this trend, back tested this trend line and support level, and then just ripped off of that. So keep an eye on volume. Volume on the weekly's tapering down heavily like that because we're midweek, but you can see here buyer volume kind of started to fall off a little bit. Seller volume stepped up with the broader market today. But MicroStrategy actually may pop off well. We'll see what it does. MSTY is probably kind of rocking along too, but you can see it caught a bounce off its 200 EMA. It also finally filled that gap at 278.72. So MicroStrategy is looking good. Oh, my bad for precaution. I'm like reading your comment down at the bottom, dude, about like the other tickers to go through as I'm covering your tickers from the beginning. So I didn't realize I was covering it on both ends there. Sorry. Realize I haven't drank this positivity tea that's sitting over here yet. Agni asked what the trend indicator is. So that one there at the bottom, and again, I use that not for flat out trading decisions. It's just one additional kind of confirmation point that I can look at, but that is this one right here, this MTFI, FTI, EMA bottom right, and this is on TradingView. Couple of others I've been using a lot lately is this Exo Trades Power 3 one, because what that one does, real quick, just so y'all can see why, and I'm gonna tell you right now, I apologize for all the lines you're about to see on this XPS chart. But the reason why I like using both of those, for instance, this price middle, right? This is the daily candle for SPX. So if I look at the daily, that is that candle. It's black because it's a red day, right? And then this is the hourly candle. So if I look at the hourly candles, give it a second to load. That is these three candles right here, these last 3 hour candles. Why do I like those? I love them, honestly, for intraday trading when I am trading something off the 5-minute and 15-minute candles, especially when I'm trading SPX or futures, because what it shows me is if I'm starting to see a reversal take place on the 5-minute and 15-minute, I can also very easily on one screen here without jumping back and forth between the 1 hour, I can actually straight up just see what the 1 hour candles are doing. And that's powerful because you can actually identify when a reversal is occurring on the 1 hour candles while it's taking place on the smaller time frame. So been digging usage of those lately. I know a lot of y'all have asked me for what indicators I use, and at the end of the day, I don't rely straight up on stuff like RSI, even the EMAs and stuff that I have here. I'm using those for larger time frame technical analysis and indication of where things are going. I'm not necessarily using those for straight up trading decisions, for trading options or intraday futures and stuff. So it's just kind of a consideration, but I've learned simple is better. So even though this looks like there's a lot going on, all those really are is just a way to show the 1 hour candles at the same time as 5 minute candles. So let's see what other tickers real quick did we have here. Rivian. Hide this, that's on the way. What you do to Rivian in after hours, man? Gosh, what you do to it? Here, I'm gonna hide this so it's not in our way again. I'll leave the other one because I like seeing the 200 EMA. So, thing on Rivian here is, while it's kind of in a flip situation from a lot of big tech too, because it completed its downside measured move, which is what Prakash is asking about, so I'm going to go ahead and delete that. It's also trying to form a higher low here. Like I said earlier, we're still in a downtrend on this until we form a higher high. But Rivian, I'm watching several different things here before I add to it. What ideally I'd like to see is a push above the 1291 level, which will help us actually make this measured move. And that would break us out of the downtrend. So we'll see whether or not Rivian gets some kind of positive sentiment. If Tesla, Amazon, and others are getting smacked, Rivian's probably going to get smacked in the meantime with them. I'm still a big fan of Rivian. I just watched a Rivian Amazon truck drive by just a few minutes ago again. So, like, Rivian's one of those kind of stocks that overall I think longer term there's a lot of potential, and it's at a good entry price point here for longer term investment. But sorry, watching this too, because there is inverse head and shoulders on the weekly that I'd like to see break to the upside, which would do so with breaking out of those downtrends. So EVs aren't getting a lot of love right now, but Rivian's probably a bit better positioned than most companies, just given how Americans are still going to keep racking up credit card debt to order stuff off Amazon every day, right? So let's see. So Miriam, you asked about TSLL2, so did Stevie over in the chat, so hopefully my explanation of that made a bit more sense. I feel bad because I canceled the first soccer, like this is totally off topic, so I apologize. Like it's total squirrel moment as I look out the window, but it's like been pouring all afternoon. I was supposed to coach second grade boys soccer practice today, and I canceled it because it's been pouring, and the fields are going to be yuck, and I was going to keep pouring. It's sunny as ever outside right now, so my guilt is strong as I look out the window because it was supposed to start at 5:30. But yeah, let me look at color real quick for you. So, interesting chart, dude. Let's see. They have earnings tomorrow. Yeah, I'm curious to see what this thing does off earnings. I mean, y'all should know by now if you've been listening for a while or been on any of the Discords or Facebook groups I'm in. But like earnings wise, I see earnings as like a flat out gamble, regardless of the ticker nowadays. A stock can kill it on earnings and still dive 20% the next day. So I say that because I probably wouldn't trade this heading into earnings. However, I'm kind of curious. I'm going to put this on my watch list to take a look at post earnings, just based off the setup. I've got it charted a bit based off people asking about it, but I don't know a whole lot about the company as a whole. So I'd like to dig into Vortex and look at the data and understand it a bit better if I'm going to trade it. But it's got some potential here, is all I'm saying, depending on what it does off earnings, because there is a demand zone right in here that it could catch bounce off of. Oh yeah, Palantir, thank you for bringing that one up. I love me some Palantir. So we traded some more calls on Palantir this past week that actually ended up doing really well. They what they do? They tagged 88% gains a couple of days ago. So I'll be looking to jump back into those once we get a little bit of clarity on a bounce. Palantir's still backtesting in the range that really honestly I wanted to see it backtest in. So I'd like to see it hold that trend there. It's trading well above its 200 EMA. It's trading above its 50 EMA, both on the daily. So that's promising. It has backfilled the gap now here. It's also playing out a inverse head and shoulders at the moment. So ideally, I'd like to see Palantir get back above that key psychological level at $100. But we'll see. We'll see what happens because the broader market sentiment is definitely playing into that and hitting it some. SMCI, I've got a strong feeling. Yeah, I've got thoughts on this ticker because I'm still not convinced of their accounting practices. I mean, I work in the business and software world. I've got an MBA, and based off the crap I've seen with their accounting and their audits and their auditors more specifically, I'm not convinced personally of the outlook. I'm a little, I don't know, like I'm not long in this thing. I don't trust it at all. So it's trying to push back up, but also that's a strong rejection, it looks like. So this thing, for all we know, this thing could be back sub $20 here in a few weeks. I just don't trust this ticker very much. So it's trying to do this retracement move here, but if it breaks that thing to the downside, it's going probably at least to $25 or lower. So definitely want to be careful on that. Sorry, trying to pull up this other list. I got people asking for other tickers. 12's cracking me up. I just now saw his GIF talking about because Tia alerted this freaking jelly perpetual 16x crypto future alert a few weeks ago, and this thing went ridiculous. Like, I'm looking at the screenshot she took this morning. It's 15,737% gain. Welcome to crypto. That's absurd. Still, I don't even want to look at it anymore. I'm clicking off of it. I don't want to see it. So, let's see. Some of y'all know I've been trading futures. I'm not going to dive into futures on this, but I can pull the analysis and post it for y'all if y'all want, so you can trade off of it tomorrow and the next day. Futures was banging today. For those of y'all that kind of followed along, it was ridiculous. Like, I got to show y'all this because this one, like, it was nuts, and it was copy trade across 5 accounts. So here, hold on, I'll grab it real quick for you. Wrong channel. And you'll see the reason why I like trading M and Q too is how it aligns with SPX and what we see on QQQ and some of the others. So where is the button to switch? Let me go here. That's not doing what I need to. Why can't y'all see the Discord? Now you can see the Discord, right? Okay. Let me find it real quick. That it was like this was a scalp off of the support levels, but like, look at this one. Where is it? This thing was nuts today. Like, I traded the break whenever there was a head and shoulders here on the smaller time frame from the last couple of days. You can see it right there. But this thing broke that trend to the downside, and I didn't expect it to die that hard. I went and set my price target down here. Just to kind of set again, this was copy traded across 5 freaking accounts. So this was just one account. I did lock the gains right around this level, right when it went past $8,000, because it tagged that kind of support zone, and then it did get a brief reversal, which is where I trade those calls, or not calls. Sorry, not calls. It's where I trade the futures long position off that. But the reason I mention this too is because when you're looking at QQQ and SPY and all these big tech tickers and trading them, it can be so powerful for trading futures, and you don't have to worry about when you're trading futures. There's not theta decay. There's not all the other stuff into premiums. How did I know it was going to be a reversal? So here, I'll show you actually on the other chart. So I was looking at QQQ and SPY. I was looking at the indicators that I showed y'all a minute ago for the Power 3. I noticed that QQQ was coming off the support level, and MNQ is micro NASDAQ, which is tied to QQQ as well, right? So I saw, for one, the support bounce occurring over there, which it was a very, very brief support bounce, but it was enough that I wanted to go and log gains on that very large $8,000 per account gain. But also, once the reversal occurred on this, I went long here because I looked at the negative gamma exposure on QQQ and SPY over on the Unusual Wells tool, and noticed that there was heavy negative gamma overhead that was going to be like a magnet. If you have no idea what I'm talking about right now, that's okay. Like, tag me in the lounge or tag me somewhere on Facebook or in a message or something, and I'll send you kind of how I use that negative gamma or that gamma exposure tool for SPY and QQQ. It shows you where the gamma exposure is for the market makers on certain strike prices, but I noticed that was going to pull up overhead, and that coincided with this falling wedge breakout to the upside with decent volume on it, and the actual kind of consolidation there pushed up. So I entered 5 contracts on the initial kind of hold there. I entered 5 more and 5 more and 5 more. So I phase in 5 at a time on micros while I'm trading futures. I could probably do a video on futures all by itself. I still owe y'all a video on supply and demand zone, support and resistance levels, and charting basics. I'll do that as a separate recording, so you don't have to wait through all the TA that I did here. But that's how I saw that there was a short-term reversal bin, was kind of a multitude of things. I typically am looking at QQQ, SPY, top weight contributors all at the same time, as well as really like that gamma exposure tool. But I locked the gains on this trade like right after this because I saw that it was rolling into this level right here, which was basically a resistance level, even though I don't have it marked. And when it did, I just locked my gains. You can see I had my stop loss already set down here right above my entry, but yeah, I locked my gains. I think it was right around 1550 or so. So that worked out well. Trade that both ways today. Worked out really good. What else? Any other questions, thoughts, comments on stuff y'all want to see real quick before I wrap up? Video here. If not, I will go ahead and kind of wrap up, go hang out with the family, make sure there's not one in the lounge. Nope, there's not. So, awesome. If y'all enjoy the video and stuff, feel free to click like and subscribe. As always happy to help or provide technical analysis. I don't know if I said your name right, dude, and I deeply apologize if I did. Q. I didn't go through in detail like how, you know what, screw it, let's do this. I apologize if any of y'all just dropped off the video because y'all thought I was going to wrap up. Let me find, what's a ticker I haven't done any TA on. We're about to do this thing from scratch, and then I'll just chisel out this part of this recording, teach somebody. Find a good high volume ticker that doesn't have any TA, and we'll draw some. I don't think I've done SAP in a while. Pros, Amazon. Well, Broadcom. I've got so many technicals there. I don't want to erase them. Somebody throw me a ticker. Throw me the tickers. Netflix. I think I've got Netflix already charted up. Yeah, watch this head and good point bringing up Netflix. So by the way, keep an eye on this freaking. You know what? Here, actually, I think I can make a copy, so I can do and I can clear the technicals. Sorry, I'm acting like a TradingView noob over here. Oh my gosh, it's blank. Okay, so I did a write-up on this the other day. I'm going to pull up the write-up over on my other screen just to make sure that I'm not... Here, you know what? Full transparency. We're going to look at the write-up on the screen, then we're going to go do it. So, show and tell. So, write-up over in Technical Analysis Basic, Beginner Guide. So, what do I got here? I think I can... Well, I thought I could jump over and make it bigger, but... hopefully y'all can see this. So when I'm doing TA, I start high level and work my way down. What do I mean? So I start on the weekly and I work my way down from there. So weekly, then daily. You can see here weekly, daily, 4 hour, 1 hour, and then if you're gonna trade day trade, 15-minute, 5-minute. I hardly ever mess with 1 minute. It's not necessary for most of our trading styles, and I scalp and everything, and you still rarely see me look at 1 minute. So, if I'm looking at this again, this is SMCI that I just cleared that on. What am I doing, guys? NVIDIA TA, we're gonna clear it. All 110. Hopefully I didn't remove it on my real one. We're gonna see what happens. So NVIDIA starting at the weekly, and these may not be exactly the same exact levels that I saw on the previous chart, but we're gonna probably get close. So if I'm looking at the weekly here, there was a reversal that took place here. So I'm gonna go ahead and mark this with a solid yellow. And the reason why is because, for one, it was a resistance level here. It also served as support resistance here, broke out strongly, support here, and so on, right? So I'm also going to note here, because you can see that that was a resistance or pivot zone, as well as here, it was a bit of support / resistance. Test here, bounce here on the weekly, bounce here on the weekly, so that's 106. I'm actually curious here in a second. We're going to go back and look and see how close this is to the levels I've got on my active chart. Keep in mind my active chart has been fine-tuned based off of, day trading and trading multiple time horizons. But if I'm charting something from scratch, I'm starting at the weekly like this for this reason. Why did I draw it there? I could have just drawn it there. I drew it there because that's one additional point that I can see that it sort of was a pivot zone. I mean, in theory, I could do it there. If I really wanted to, actually I will, since we're above, that's more conservative. So, drawing my levels there, I'm then going to go over to the daily. And you can see when looking at the daily here, a lot of it coincides, as it should, because the daily feeds into the weekly. But once I jump over to the daily like this, I could fine tune and tweak stuff if I wanted to be more aligned with what the exact levels were on the daily charts. I can also come back in here and I can draw additional key levels of support and resistance that make sense based off of what I'm seeing here. What you'll see on that write-up as well is that it mentions calling out and flagging any daily gaps that have not been filled. So we talked a little bit about that earlier. I'm going to go ahead and show you an example right here. This gap right here has not been filled yet. So I'm going to mark that with a purple dotted line because gaps tend to get filled. So I think there's another gap somewhere on NVIDIA over here that hasn't been filled, if I remember right, but for the sake of kind of walking through how to TA, we won't worry about it. You can see, looking at this though here, and again, this is one of those things that you'll start, the more you do it, the faster you are, and the more you start to notice stuff kind of on the fly like I just did. So I saw a reversal potential here, but then also I can see at that level searcher here, here, and we haven't really touched it again over here. So I'm marking that level, which is the 124 level, and then also where we currently are, you can see like right in there that there was some support in that range, and that is a demand zone if we are above it. I'm going to go ahead and mark right in there because you can see it was resistance here, support here once it broke above, and when we broke that level there was a strong sell-off. It was support right through this zone with the push up. It was support here, and you can see we're kind of tinkering around the same level again. So coincidence or not, those levels are actually looking really familiar and looking very similar, even if they're not to the penny, of a lot of the levels you see over on my TA that I have on my normal chart for NVIDIA. But like I mentioned in the breakdown, as well as kind of talk through here, daily and weekly, that's where you're looking for your main zones in your levels of supply and demand zones. From there, you can drill into the 4 hour, the 1 hour, and really that's where you're going to start to notice more stuff. Larger, looking at the daily here, you might also want to identify any of your key trends that are ongoing. Sorry. Pull this over the side. So that downtrend is intact. For one, like we talked about earlier, you've got a high, a low, a lower high, a low. I mean, I could technically say low, lower high, but a lower high, or I'm sorry, a lower high, a lower low, and potentially a lower high right now. So downtrend. I'm drawing the trend line though, because that is a good point. One thing I will warn people, and sorry, I should know how to do this, but I don't. I was going to draw a candle right here. One thing I'll warn y'all on, let's say if NVIDIA all of a sudden tomorrow pushed up right here and poked a daily candle above this downtrend line, I always vote for ensuring that confirmation comes through with strong buying volume as the follow-through candle and potentially even the weekly candle. Reason being is I can show you so many times on AMD and multiple other tickers where we poked above a downtrend line like that on the daily even, and then just rejected back under it on the following day, and we maintained a downtrend. So that's why it's important to look for a higher high. Overall on NVIDIA, some other stuff that you might want to chart here is your uptrends. So you can see there was an uptrend going on here that broke previously, right? Sorry, I should have done a better job of mapping that to that level, but we broke that. So that one is not even really valid anymore, right? But as of right now, we've actually broke the larger time frame uptrend on NVIDIA. It looks like I didn't realize we had been such a steep decline at this point. We've not only broken NVIDIA's uptrend, we've broken, retested, and rejected, which is no bueno. So we actually might be in a true reversal on NVIDIA. We'll see what shakes out on it. But yeah, I mean, from a TA standpoint, doing the basics, like that's what you would want to do from a larger standpoint, confirmation. So I've actually got a write-up on that too. I'm going to keep on talking about write-ups. But basically, follow through. Confirmation is going to be based on whatever the time horizon is that you're looking at for the given trade. And I don't mean to be vague by saying that, because if we're looking at something in a larger time frame like this, yes, you're going to want to see confirmation or follow through candles with strong volume coming through here. You know what, here it's like right here, so we're just gonna click it anyways. This is confirmation on a 5 minute. Wait, you can't see that. Let me click this. Sorry. This is confirmation on a 5 minute candle for SPX. So again, like, it's gonna be subjective to the time horizon you're trading, but what I was looking for on this example here, look at example 1. So bearish confirmation for a drop. So strong candle below support, retest failure, volume surge on the breakdown. So break below support, volume increased on the breakdown, and follow through. And then we broke down further. Same thing over here with a bounce and a retracement. So right here, for example 2, you can see, right, double bottom formed, and double bottom gets very much confusing for a lot of newer traders because the double bottom pattern is not confirmed based off tapping the same support level twice. A double bottom is actually confirmed once you push above the previous high, and I'll show you that here in a second. But bullish engulfing candle at support and retest happened. So yes, we double bottomed here. And sorry, I know y'all probably, can y'all see my cursor at least? Yeah, you can see my cursor. We double bottomed here, but that's not your safe entry. So your safe entry on this for a double bottom is once you push above the overhead resistance. And what we did was right here, we pushed above the overhead resistance and we back tested right here at 556.98. Here, I'll zoom in. This back test wick right here, bounce, back tested right there on that. That is your entry point for a double bottom pattern. And that is confirmation because there was strong increasing buying volume in conjunction with those things. And again, this is a 5 minute. This was an intraday scalp setup that we trade SPX on, calls and puts. But similar types of confirmation are going to be what you're looking for on larger time frames. For instance, with NVIDIA, I would like, if we're in a broader downtrend on the daily and weekly charts, I want to see a strong buying volume candle on the daily and weekly charts pushing or piercing through a overhead resistance, showing that buyers are blowing through that supply zone that is overhead. So that is what we would want to see. And I can give y'all a much better kind of write-up analysis on that. Honestly, I'm going to put that on my list over here. because I should do that. So confirmation on daily and weekly candles and patterns. Alright, I owe y'all that. Definitely something we should do. But like we went through the drawing basic TA here of support and resistance levels. Again, I've got that right up if anybody needs it, but how do you distinguish confirmation versus chasing? So, it's a good question. Let me think of a good recent example of that. That doesn't get really complicated with accounting for stuff like OPEX and all that extra stuff that impacted why I didn't go into calls on Nvidia and Tesla and other things lately. I could explain that a few different ways, and the two different ways that are coming to mind are going to go really complicated really fast and defeat the purpose. Let me think. Let me see if I got an example real quick. I think I've got a couple examples I can give you for that. Let's see. Let me see. It's a good ticker that recently did it. Let's see here. Still here, in case y'all can't hear the click to click of my mechanical. Trying to look through a few different ones I've got here. I kind of want to do it on Nvidia, honestly. Let me do it on Nvidia. Yeah, I've got a gaming keyboard. What's bad is I've got a gaming keyboard and a gaming PC, and I don't hardly game on them. I game on my Xbox. So, I mean, if I'm looking at a video, let's talk through and think through from a standpoint. Actually, here, let's do this so that y'all can actually learn how to apply the technical analysis that I often share. We're gonna do this. We're gonna look really quick, and this isn't like a Discord plug, by the way. I'm gonna do it this way because I think that it might help kill two birds with one stone, if that makes sense. So if I jump down here to Nvidia and I look at the technical analysis from yesterday, right? You can see that for one, we failed to close above the 200 EMA. We wanted to see confirmation, so even looking at the one of the previous days, we were looking for confirmation of a close and follow through above the 200 EMA. So if I'm looking at Nvidia, this was 2 days ago, right? If I jump back over to Nvidia for you, I'm sorry, this is a terrible explanation here as I'm going through this, but hopefully it makes sense after the fact. A good example of something not confirming was Nvidia poking above and not having a follow through candle here on the daily above the 200 EMA and rejecting and pushing back below the following day. While I know that QQQ and others did close above their 200 EMA, There was also multiple things here. So like when I'm looking for confirmation, if you look at a lot of my write-ups, it's not just that something closes above a given level. Volume is also a really good tool. Hey, gaming PC for like work and life and trading and everything, my friend. Like, I work for a software company. Half of my friends and my coworkers all have gaming PCs, but a lot of them game. Sorry, I went down a rabbit hole. But if I'm looking at something, for one, I want to see a close above. 2, I want to see a follow through close candle above. 3, I want to see that volume supports and justifies whatever that movement is. So, for instance, looking at QQQ here as it poked above, or NVIDIA, it went above the 200 EMA, which a lot of people would be like, hey, you said above 200 EMA means bullish. No, not what I said. And if you read any of the actual TA I post, I'm actually really cautious when we're dancing around levels like that. If we had strong increasing buying volume as we pushed above the 200 EMA here, that would be promising, but I would still want to see follow through above that on the weekly candle close. Because otherwise, what ends up happening, like if I look over at NVIDIA here, my daily candle, and when I do change between weekly and daily, the EMA is going to change because it's based off the daily and weeklies, right? But the reason why that is important to note is right here, again, we poked above that 200 EMA, but look, volume sucks. Volume's tapering off. Buyer exhaustion is occurring at a dynamic resistance level effectively. So that did not confirm. If you entered into calls or shares above that level there, you're chasing a move that probably isn't going to happen. And the problem that I see happen most often is that people will enter on something like that, and maybe once out of 5 times it works out in their favor. And then that is like what they stand by, and like that's the only one you'll hear about. They won't tell you about the other 4 or 9 out of 10 if we're going to do a 10 basis, where they got wrecked and it didn't work out in their favor. They're going to tell you about the one that did. And I mean, y'all seen me. I'm super transparent about anything I trade, as well as any of the technical analysis and any of the stuff on what I'm thinking. I'm just going to put it all out there. If I'm wrong, I'm wrong. That's okay. We're all going to learn and grow and improve. None of us are right 100% of the time, but typically I'm looking for further confirmation. Damn, I just realized how far down all the tech is in after hours. I just looked over and saw this. Are y'all seeing this? Like, wow. Okay. So, Tesla's hanging on by a thread at this point, but wow. Sorry, I don't know how I didn't notice that as we were going through all the other stuff. I just happened to glance over as I was talking and saw this massive red extended hours column. So, preferred way to backtest for practice. I guess let me ask, when you say backtest for practice, do I have a tool or utility that I use that I like to see how something played out based off what I thought it was going to do before and after? As in, like, do I use the replay functionality on TradingView? If that is the question, I don't really use it a whole lot. I just keep really, really detailed notes, and any of the TA I post for NVIDIA, or like any of the TA I post in general, I have it organized in my Discord so that I can actually kind of reference back and see how things played out in reference to how my technical analysis was beforehand. But also that gives, like again, back to the transparency thing, that gives everyone else the ability to look at how accurate was the analysis in comparison. Because it's not like I'm putting it out there and deleting the post or something. Like, historicals are out there for years. Have at it. But yeah, volume. If kind of circling back to close out, because I do got to wrap up here in a second and go hang out with the fam. For one, closing candles, whether it's a daily or weekly candle, if I'm looking at a larger time frame, I need to see that close above. Ideally above a resistance as well if I'm looking for an upside breakout, because if we close right below a resistance level or right at, that's concerning, because more than likely we're going to end up rejecting at that resistance level. Same thing for a support. If we close right at the support level, the support's probably not going to hold. Not saying that's always the case, especially if you bounce at support and you have strong buyer volume that comes into play with that. Then, like for instance right here, like we caught the bounce at that 106 level on NVIDIA, and we had strong buyer volume still taking place with it. So yeah, it bounced and it pushed up, so that helped sustain. But then as we got over into here, that 200 EMA, basically that is a dynamic or a moving resistance level. So think of that as like this 124 resistance, except it's moving. That's how you can think of the 200 EMA on the daily. So yeah, hopefully that made sense. I'll put together kind of the detailed breakdown, and kind of I'll take what I just described as well as the other write-ups I already have, and I'll put together kind of like a. Actually, I'll be very particular with it for you, Seth, and I'll put in my channel thing that says how to distinguish breakout, confirmation versus chasing. Yeah, you can alert yourself if you want, but yeah, don't chase stuff. There's one thing I always tell people is don't feel like you missed a trading opportunity, because there's always 100% of the time there's always another trade. We all get FOMO when we miss out or close something early, or we don't trade it, but there's always another trade. Even if it's another ticker, another time frame, another chart, there's always another trade. So don't let your fear of missing out on a certain trade like get you into something. I guarantee you, tons of retail traders the last 2 days locked into calls on Nvidia and Apple and Google and QQQ and SPY and even Tesla, with the intent of, oh, we're going to 300. Like, I can't tell you how many times on Tesla I've heard that we're going to 300, and we could, but a bunch of people are going to get burned on that same idea. Same thing with Nvidia, thinking that, oh, we're pushing out strong here, all these green candles mean we're going to 125 this week, and they'll buy calls too early. They get trapped, they can't escape, they can't get out, and then they're stuck with making a decision: do I sell for this huge loss, which most won't, or do they ride it out and then it ends up expiring worthless? And we all went through that point in our trading journey early on. The important thing is learn to not do that, and learn when to be patient, because patience helps a ton. So on that note, hopefully kind of that last minute kind of roundabout go through and chaos of me trying to explain supply and demand, support, resistance, and confirmation versus chasing made sense. I'm going to wrap up because I went way over and I got to go help out with the kiddos. If there's anything else y'all do want stuff, for real, send me a message on Facebook, send me a message on Discord. If you do send me a message on Discord, if you can, because I think it's got it blocking. If you're on any of the servers with me, first tag me in the lounge discussion channel, anything like that, and just say, hey, send me a message. I've got a question, or I've got a topic I'd love for you to cover in a video, and I'll be more than happy to. I'm always looking for feedback on topics that y'all want to see. That way I can provide feedback and timely educational stuff. And some of the stuff I haven't learned before, so it's a good opportunity for us to learn together. That's one of the best ways I learn, is by walking through and learning something while helping others to learn it. And that's how I've learned as much as I have about stock trading and technical analysis and everything. So on that note, I appreciate everyone that hung in. For those of you that kind of, come back and listen to it later, that's cool too. I appreciate you taking the time to sit in after. If you haven't already, please do like and subscribe, so it helps with the algorithm. But I'll close out. Everyone have a great night and good luck tomorrow. Thanks all.